Hi everyone. Welcome to this morning's live stream. It's going to be a very uh, slightly shorter session that we've done up until now because we've had a lot of questions about volatility and just wanting to know a little bit more about it, why it's so important to understand, and the impact that it has not just on the chart that you may be looking at, but also the impact that it has on us as traders from a psychological and an emotional perspective. So before we start, let me just share my screen very quickly. And let's have a look. Here we are. Right. I've actually got the pound yen up this morning. Because there's been a really nice move in the pair. They've broken out of a consolidation phase, as we can see here, top left on the daily chart. And the sessions thus far, we have been looking at consolidation phases in all the different time frames, particularly on maybe the slower time frames, the hour. We haven't really looked at the daily, but particularly the hour, and see how that can impact what is going on the faster time frames, how we can identify consolidation phases. You can eyeball them, you can put manual lines on yourself, or as we discussed in a previous session, using our quantum trading pivots indicator. And there have been some, we had a really nice example of that on cable. I know we're going to be looking at cable later on in this short session. But volatility, go back to volatility, and in fact, it's a great excuse to go back to the Dixie chart that we actually started with on this series of live streams. And if I just make that a little bit bigger so you can see. And for those of you who haven't been coming along regularly, I just want to explain what we have on this chart. This blue line here is actually a level that I have taken from the monthly chart. And the reason I've taken it from the monthly chart, in fact, if you look at the monthly chart, it's probably best if you can see it quickly. There we are. Here we are. Yes, if we go back to March 2022, you see that it was the point around this area which led to the start of a very strong rally for the US dollar. Now, the key thing, obviously, it did actually break that level there back in June. But from a VPA perspective, the significance of this level is given is even stronger if we look at the relationship between the price action and the volume. What we see heavily falling prices. We can see here, we can see here, but look at the volume. And that's the first thing that actually caught my eye. It's always the VPA that comes first. And then I looked at that and said, well, that's interesting. Why has it come, why is it coming down? Why is it doing this from a VPA perspective? Is there any particular reason for it? And then I just looked over to the left-hand side and I say, well, in this zone, in this area, we had the start of a strong rally for the Dixie. And if we go back to the daily chart, which is why I put it on my chart, and you can see it overshot it slightly. Levels that we draw on either manually or are created for us by specialist indicators, be it Fibonacci, be it the ones that we have from quantum trading. You have to give them a certain amount of leeway. They're not pinpoint. You can't sort of say, right, absolutely down to that pip. You've got to give them a little bit of flexibility, and also just be aware of the level. As you see here, it actually broke through. There was a fair amount of volume coming in, but you can see the spreads coming down, and then they narrow on this one. We have a pivot. We've got a small hammer candle with a lot of volume underneath it, the same volume on that tiny candle as there was on this one and the previous one and the previous one. So you can see, obviously, there's stopping volume coming in. The price doesn't want to fall any further. And so it starts the slow climb higher back to this 90, the key 97, 97 levels, as I pointed out on the monthly chart. Now, when you have such an important level, and a level can be even something like a 200 MA, it becomes a kind of psychological level because the market is always talking about the 200 MA. What you want to see a break with good volume. And what sometimes happens is you then get a volatility. You get you get that additional burst of energy, of activity, of participation. And in fact, we had that on Wednesday. We can see here the daily chart came in. The volume was much higher. You need a lot of volume. You need extra volume to get over these significant levels. And in fact, it triggered the volatility candle. Now, there's two aspects to what we call a volatility candle. Some people call a master candle. I've even heard it described as a manipulation candle. And if you think about it, or psychological candle, because the reason is this: as traders, we can sit here for however long we sit here waiting for our preferred setup. We're waiting for the market to react maybe to a piece of news. We're just waiting. We spend an awful lot of time waiting. And if we think about it, markets spend maybe up to 80% of their time in consolidation. And if it's markets are moving sideways, we have to wait that little bit more, if obviously waiting for a trend. And so what happens is market makers know this. They know we get bored. We get fed up. Well, nothing's happening. Oh, I'm getting bored. I'm getting fed up. And then suddenly you have a burst of activity, of momentum. Volatility comes in. Volatility is non-directional, except in one case, which I'll say later. And we suddenly see price moving, and we get terribly excited, and the dopamine starts going is triggered in our brain. And what it does, it triggers the one emotion that we really, really have to keep under control and have to manage, and that is the fear of missing out. Because when we see things moving strongly and moving quickly, we want to take advantage of it. Who wouldn't? But you have to, first of all, understand and determine, well, am I being manipulated into, jumping on this move because the market makers, the insiders, want to push the price to a particular level, because once it gets to that level, they're going to reverse it. I mean, we don't know. All we know is volatility has come in. The price is moving faster, particularly to the downside. In the last session, David showed you we have an indicator called the tick speedometer, which actually measures the number of ticks, the number of the times the price changes, and you can see it in action as more participation comes in. The bids and asks, they move like lightning. When the market is quiet, nothing. It just plods along, and it making us even more frustrated. So, with the trigger of the volatility on the daily chart, there's two aspects of this. There is, as I said, the psychological aspect. It is over this level, but we still have to approach it with a degree of caution. Now, what normally happens when this is triggered, especially particularly more so on the slow timeframes, the price will retreat to within the spread of the candle, and we can expect then another period of consolidation. And in fact, that is what we've had. So we had the volatility, a lot of volume went in there, and we have back into the spread of the candle. And now the volatility candle itself, the manipulation candle, the high and the low of this candle. And if we put a line across here, you can see you've got the resistance all the way back here to about 90. Well, it's about 98, almost 99, as it were. So you've got that as resistance now, and your support is now very much the 97. So if you like, once it's got over this level, we are now within in this congestion, in a sideways range on the daily chart. And if you want to put additional levels to remind you of that on the faster time frames, you could put something like, as I use this little drawing tool over here. I use Ray. I have it in pink color, so I put that there. So I can see that there, and I've got it with the blue, or if I want, I could move it down there. But that tells me where we are moving forward. Certainly for today, we'll see what happens after the weekend. And really, one of the biggest pieces of news, we've had a lot of economic data. I don't think there's much today, but the retail sales came in much better than expected. That gave the market a lift. But the kind of background news to all this is what is going to happen to Jerome Powell, and whether he is going to resign, whether he's going to, as I said, be fired. I don't think that is possible, from what I understand of how the Federal Reserve is set up. But that's the kind of main news. And I think it's always interesting. Well, certainly when David and I were in corporate life, if you want to get rid of someone, and you can't just say you're fired. This is unlike the reality shows. You're useless. Get out. You usually find an excuse from either process hasn't been followed, or there's been some dealings that are not a bit, what we say, a bit moody. They're okay. And with the Fed, the interesting thing is their refurbishment of their building has. I think the costs have come in at 2.6 billion. I mean, good grief! What have they got? Diamond-studded taps in the bathroom or something? I'm just astounded, of what the refurbish. So maybe they'll get him on something, not running the proper budget. Who knows? So that's the background story. Right, pound yen very quickly. As I said, this is a quick session because I wanted to look a little bit more, talk a little bit more about volatility and the reaction that it is designed to trigger in us. And as I said, that emotion is FOMO. Right, pound yen. Again, we see here this has been moving within this range. It's quite a decent range, 98.20, about 100 pips. It says up, down, up, and within those individual candles, obviously on the faster time frame, there would have been opportunities for scalping and short-term trades, but now it's looked like it has broken higher. If it has, that will now give us a really nice platform of support. And why did I put these lines in? Well, I just show you. I only have to scrunch up the chart, and you can see. So this is how I do it from here to here. And what's interesting is on previous occasions, that came away, tested it. I mean, with support and resistance, you always have to accept that there's always the possibility, the likelihood of a retest. And then what happens in the retesting and how the price action plays out, you then get patterns. So you could say, well, that was a really nice double top there. It broke through, it tested it again, and then it falls. So you do, with support and resistance and what happens with the price action at these levels, you then do bring in the other element of volume price analysis, which is candles and candle patterns. And what you then also take it on one step further is that certain instruments, certain markets respond to certain patterns. I mean, there is a hierarchy of success, if you like, the probability of success in patterns. Some are stronger, some have been shown to develop and come to fruition, if you like, more than others. I mean, the double top is one, the double bottom, the triple top. They are just stronger. Others not so much. So there we are with the pound yen. If we look at the as I said, at the faster time frames here, we can see this is from, as I said, 8 o'clock is our time here. Nor usually, I'm a bit disappointed actually. Usually we get lots of volatility around the London Open. We haven't today, so markets are quite quiet, quite complacent. No volatility is complacency. That's just as dangerous as a market that is completely out of control.